Ladies and gentlemen, good day and welcome to Gulshan Polyols Limited Q2 FY26 earnings call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Today we have with us Ms. Aditi Pasari, Joint Managing Director, and Mr. Rajiv Gupta, CFO. I now hand the conference over to Ms. Aditi Pasari, Joint Managing Director. Thank you, and over to you, ma'am.
Thank you so much. Good afternoon, everyone. This is Aditi Pasari, Joint Managing Director of Gulshan Polyols Limited. Gulshan Polyols is a multi-product, multi-location company producing ethanol as well as specialty chemicals like starch, sorbitol, and other mineral-based chemicals like calcium carbonate. We have plants all over the country. We have about 9 plants all over the country, the major ones being in Madhya Pradesh, Gujarat, Uttar Pradesh, Assam. We are delighted to say that the company is producing good results quarter on quarter, and this quarter as well, we have shown a very good growth in the top line as well as the bottom line. The top line, we have shown a YOY growth of 23% on the revenue front. And as far as EBITDA is concerned, we have shown a tremendous jump of 140% on the EBITDA front, EBITDA percentage YOY. Also at the PAT, we have shown a multiple growth, almost 1,000% growth on the bottom line, which is the PAT levels. So happy to say that, I'm delighted to say that the company is on a U-turn recovery mode as far as the bottom line is concerned. We are looking at better margins quarter on quarter, and we're looking forward to turning out good results, strong numbers quarter on quarter going forward. I'm very happy to take any kind of questions from the forum.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sukh Sharma, an individual investor. Please go ahead.
Thank you so much for the call. I just wanted to ask that the company has received a PLI from the MP government, and I wanted to know going forward, how is the accounting of this PLI going to happen? Is it going to be considered as an income, or are you going to reduce asset prices in the books and whereby indirectly adjusting it?
Yes, so we have received a PLI of 5.34 crores in the month of October, which will get factored in quarter 3 results. And this will be treated as other income in our P&L account.
Okay, thank you so much. And I just wanted to know how much incentive is pending from the MP government and as well as the Assam government.
Yeah, so we have another, from MP government, we have already received a sanction of about 14 to 15 crores. Which will also, we are expecting to come in the second half of this financial year. Apart from that, from the Assam government, we are looking at receiving another 5 crores from the NEETS, the Northeastern, the NEETS policy, which is about 5 crores from there. And the PLI will also start coming maybe in the second half of the year or first half of the next following year.
Okay, noted. Thank you so much.
Thank you. The next question is from the line of Sushil Kumar from Venar. Please go ahead. Mr. Sushil, please go ahead.
Good morning, Aditi.
Good morning, Sushil. How are you doing?
All good. What about you?
Very well, thank you.
Okay, so one thing I wanted to check, are we going to refer these two as a PLI or is it an investment subsidy that we are getting from the MP government and Assam government?
It will be referred as a PLI only. The production linked incentive. Yeah.
Okay, fine. And
It
second thing I
will
wanted to
part
know,
of the other operating revenue.
yeah, that I understand.
Yeah.
The second thing I wanted to know, how much percentage we are now producing from FCI rice and how much from the maize?
In the current tender, which is the ESY 25-26, the OMCs have made it mandatory for the ethanol industry to produce 40% from SCI rice.
Okay.
So 40% will be from SCI rice, and when I see the average between MP and Assam plant, 40% is FCI, about 45% is from maize, and 15% is from DSG.
Okay, fine. And what are the current prices for maize delivered to our plant?
There has been a correction in the maize prices. Current prices are between around 21 rupees.
Okay, fine. Thank you so much, Aditi. Wishing you all the best going ahead.
Thank you very much.
Thank you. The next question is from the line of Sherwani Mishra, an individual investor. Please go ahead.
Hello. Yeah, the balance sheet shows a significant jump in borrowings from the company. Is that the correct way to look at that? Because the inventory increasing and then we are increasing our borrowings to fund inventory. And the right way to look at it would be what? Is it inventory borrowing or is it any other parameter that you use?
Yeah, I'm asking Rajeev ji will be answering this call. He's with me, the CFO.
Yeah, very good morning. And
Good morning.
the question you want to understand, is it borrowing is jumped, there is an increase in borrowing for funding inventory or something else? That is the question
Yes.
you are asking. See,
Yes.
it's very clear. Yes, actually, you can see that we have last year closed our revenue at last year, we were at if you see 2024, we were at a revenue of around 1378 crore rupees. And from there, we jumped to 2020 crore rupees. So there was a jump of 47%. And this is because of the two plants which commenced production in 23 as well as 24. So basically, the requirement which has jumped is basically because of working capital requirement, not because of the term loan, because term loan is already we have availed in 22 and 23. So jump was only to fund our working capital requirement because of jump into revenue also, because we have to achieve revenue, we need inventory, we need to buy raw material. This is a circle which we have to complete. So basically, the jump was due to for working capital requirement only, nothing else.
Okay. I have a follow-up question. Can you shed some light on how much this will go into the future because of the increase, and what will be the position of the loans due to the funding inventory in the future?
See, we presently are borrowing working capital to the tune of 250 crore. And if you see our borrowing in March 25 also, working capital borrowing is stood at 157 crore versus turnover around 2020 crore. So you can see that we are the most conservative company into looking into the borrowing. We always depend on our collection itself. So, but to fund sometime because of some seasons and requirement of raw material in the peak season, we need to enhance our working capital requirement. So, from 157, we now presently are 250 crore. And I think another 25, 30 crore, maximum 50 crore, will not go beyond 250 to 75 crore or 300 crore during this year maximum.
I would also like to add this, that you see, of course, the revenue has grown, so the working capital requirement has grown for the company. And secondly, you see, there's also been a shift to FCI rice. The procurement is happening through FCI rice going forward. 40% procurement of raw material is through FCI rice, which is on advance basis. Vis-a-vis other raw material, which is on a 20 to 30 day credit basis. So therefore, definitely we will be requiring working capital. The requirement will go up because 40% of raw material is being paid in advance. So you will be seeing that shift in the next few months.
Got it. Thank you for answering my question.
Thank you. The next question is from the line of Sushil Kumar from Vinat. Please go ahead.
Aditi, the follow-up question is regarding the quantity.
Mr. Sushil, you're not audible. Mr. Sushil, the line for the participant is disconnected. The next question is from the line of Saurabh Shah from Infit. Please go ahead.
Hello. Am I audible?
Yes, sir, you're audible.
Thank you for the opportunity. I just like to ask, the grain processing segment has finally seen some positive numbers after a few quarters. Is this a part of the recovery stage in the grain processing business, or was this a one-off and we are still in murky territory?
So you see, we had mentioned in the last call that the grain processing division, it was a starch business which was incurring losses and bringing the grain processing division down. So that we have temporarily put the division on hold because we were unable to even cover the variable cost in that particular division. So that has helped in bringing the losses down and making the division into positive. So that is basically the reason. But also going forward, we are expecting even this division to come on a recovery mode as there has been a correction of raw material prices across both the ethanol division as well as the grain processing division. So we are expecting going forward, even this division will be in a recovery mode.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, ma'am.
Yeah, on the previous participant's question, the grain processing division, so as you said that we have currently stopped the production on that side. So what do we see when sort of the recovery will start, maybe from the second half, or are we expecting it from the next financial year?
No, we only have put one particular product on hold, which is starch, which contributes less than 10% of the total revenue. The rest of the other products like sorbitol, fructose, they are very much in production. So it was starch which was incurring heavy losses, and temporarily closing that has given some relief to the division as far as the profitability is concerned. But yeah, going forward, we are looking at starting that all over again because we see some correction in the raw material prices. So we are expecting better recovery on this division going forward. In the second half of this year, we will be seeing recovery in this division.
The starch business is 10% of the grain processing business or of the overall turnover of the company?
Overall turnover of the company.
Okay, and going forward, what sort of margins do we expect this unit to have on like an overall basis? Not maybe FY26, but FY27?
For grain processing?
Yeah.
In grain processing, we are experiencing skewed margins because of overcapacity in the country. So you see, 3 years back, grain processing was the main revenue contributor as well as the main bottom line contributor for the company. And during COVID, if you see the results in 2021, it is grain processing which gave very, very good results for the company. And soon after that, many capacities got created in the country. And also China got closed for the world. So when China got closed, the capacities which got created in the country were basically exporting to the world. And just a few months back, now China has opened all over again. And now again, we are facing competition from China. So the overcapacity which got created in the country are basically hampering the domestic market. Hence, the prices have gone down and become very unviable for operations. Very fortunately for Gulshan Polyols, because we are a multi-product company, so we had a luxury of closing one division which was loss-making and still show revenue growth and bottom line growth because we have multiple products. Many other companies who don't have that luxury of closing a division because that may be the major revenue contributor, are still buying, are still selling and producing, even if it is making losses. So, hence, there has been overcapacities in the country, but as there is a correction in the raw material price, we are expecting that we will be able to turn over again this division in the second half of the year.
Okay. And on the mineral processing side, we had the highest margins in the past 4 quarters, I could say, close to 26%, 26.5%. So do we see this sustaining at this revenue trend of 20 to 25 crores?
This is a more stable business actually. It is our oldest business, the mineral processing business. It's almost a 40-year-old division for us, you know. So, yes, definitely we are maintaining the margins in this business. We may see a drop in revenue. That may be possible by 5 or 10%. But we are definitely we are sticking with our customer base and sticking with the margins. So we are not giving up on the margins, even if we have to lose out on some customers, but we are not giving out on the margins. So we expect to be maintaining this going forward as well.
Yeah, on the mineral side.
Sorry?
Any sort of range you could give on the mineral side? Because we had a 24% and then we had a 27% just quarter on quarter, so around 300 basis points increase.
I think 23 to 24% is a reasonable margin for this division. We will be maintaining this.
Okay. And do we have a overall guidance for the company for 26 and 27 on the revenue and EBITDA margins?
So you see the company has overall capacity to produce, to give out a revenue of almost 3,000 crores, all the divisions put together. So we do look forward at 80 to 90% of capacity utilization in 26, 27 of all our divisions, which will definitely give us a revenue of about 2,800 crores. So that is our target. Again, all subject to market conditions and also the tenders and the allocations which we will be receiving from OMCs in additional cycles of this year as well as next year.
Mm-hmm. And for 27?
This is for FY27. I'm talking for FY27.
Okay, talking about FY27. 27,
yeah.
We are targeting a 2,800 crore revenue.
Yes. Subject to allocation which we receive from OMCs and the other market conditions.
Okay. And for 26, any sort of guidance, or are we continuing with?
We're looking at a 20% revenue growth from last year, from FY25.
Yeah, that is it from my side. Thank you.
Thank you very much. The next question is from the line of Sushil Kumar from Venna. Please go ahead.
Yeah, sorry, my line got disconnected. Aditya, asking the present allocation is for about 17 crore liters, while we are targeting for about 23 to 24 crore liters for the full year. So out of this balance, 6 to 7 crore, how much will be coming from the private refiners?
See, private refiners are not price competitive. So they always are looking at getting the cheapest ethanol, which is from the sugar mode.
Okay.
Yeah, so that is not our target audience at all. We are looking at, there will be additional cycles which will be coming very soon, C2, C3, C4. So at least 3 to 4 more cycles will be coming in the next few months. And we are expecting to make up the lost allocation in these cycles, in these additional cycles.
Oh, because I see that there is already more quantity was offered during this cycle also. So do you think we'll be getting allocation in the next cycles, or we already got enough in the first cycle itself?
No, the OMC has not released its entire requirement. So they do require about 200 crore litre more than what was released in this tender. So for which they will be coming up with additional cycles.
Oh, thank you so much.
Thank you.
Thank you. The next question is from the line of Supain Parekh, an individual investor. Please go ahead.
Hello. Thank you for the opportunity. I have 2 questions. So, like over the last few quarters, the ethanol segment margins have been improving consistently, even though the government's ethanol prices have been remain unchanged. So this suggests that the improvement is likely driven by lower raw material cost or higher operational efficiency, particularly in terms of power cost. So could you please provide a breakdown of the contribution from both these sectors?
So see, of course, after FCI rice has got released for the ethanol sector, which happened in the month of March and April, so the entire agronomy of grain has easen off. The liquidity of grain has improved in the market because ethanol industry was available with buying the option of FCI rice from the government. So that has really eased off the pressure of grain for the industry. So that is, of course, number one. And of course, secondly, as the plants are getting more mature and reaching the second year of their operations, so operational efficiency is also coming in place, So it is a combination of operational efficiencies as well as grain price correction.
Okay. Could you please share the current raw material and power cost levels for the recent quarter?
So for every plant, it is different. If I talk for MP plant, the current maize prices are at about 21 rupees, 21, 22 rupees. And rice is at about 24 to 25 rupees. The power and fuel cost would be about 6 rupees a liter.
Okay. So next question is also could you please clarify whether the allocation of 21 crore liters of ethanol received by the company from the OMCs pertains to the entire ethanol supply for the year or it's just for the first 3 quarters?
No, so the company has received an allocation of 17.5 crore liter, which is for ESY 25-26, which starts in November 25 and goes up to October 26.
Okay, got it. And with the current order books in hand, the company is expected to significantly improve in capacity utilization. So should we therefore expect more utilization exceed 80% in the current year or maybe year forward?
I think the guidance for FY27 is working on 80 to 90% capacity utilization, all subject to allocation from the tender. Again, this time we have received lower tender as far as our capacities are concerned, which we are expecting it will make up in the additional tenders. So company definitely has a capacity to produce 23 crore liters, but it is also subject to the allocations which we receive from the OMCs.
For 26, it would be the same level of capacity?
No, we are expecting an improvement by at least 20% in the in FY26. Yeah.
Okay. Thank you.
Thank you. Ladies and gentlemen, in order to ask a question, please press star and 1. I repeat, in order to ask a question, please press star and 1. Participants who wish to ask a question may press star and 1. As there are no further questions, I would now like to hand the conference over to Ms. Aditi Pasari for closing comments.
I would like to thank all the investors, the shareholders for joining the call and asking all relevant questions. And I hope all our answers were satisfactory. And we look forward to continue to be on the growth path for the company as well as revenue is concerned, and also look at a U-turn recovery for the company as far as the bottom line is concerned. And thank you very much, and thank you everyone for your time.
Thank you very much. On behalf of Gulshan Polyols Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.